Hi there, traders. This is Brad Gilbert with today's trading action. All right, now we've had the Fed come and go. No major significant changes. If you want to check the statement, I would encourage you to do so. And also check out the press conference if you've got time. It is a bit lengthy, but you can also find out and you feel the tone of the chairman, Jerome Powell, talking about what's going on. Now, they've got their heart set on achieving interest rates or inflation, I should say, around 2% over the longer run. They are saying it's been a little bit sticky, but you know what? It's a softer tone overall, right? And you can have a look at the last paragraph. That's usually where the goodies are. Overall, what has it done for us? I'd say a slightly softer tone than expected. Now, with that, you're going to see equities go up, right? That's the sort of key to it. That should create a bit of a risk-on situation in normal market conditions. Euro, sterling, Aussie, Kiwi should be going up and the dollar going down. But what are we actually seeing? Well, we're seeing a bit of a mixed reaction, and that's because the BOJ have been at it again. It took dollar yen from 158 down to almost 153. It's almost back at 156, right? These guys will not give up. They don't learn as far as intervening. But what it's done is, because the Fed has got a slightly softer tone, we have seen the dollar sort of drift off. Now, the hardest part about the BOJ and the Fed at the same time, it's hard to interpret what is driving what. To me, most of this move is probably obviously the dollar yen, okay, pushing the dollar down. You see euro, sterling, Aussie, Kiwi all going up, right, in a reaction to that yen move, right? You sell dollars, dollar goes down against everything. So, you know, is it hard to interpret what's happening on from the Fed? Well, not really, because if they had a hawkish tone, right, the equities would be coming off, but they're not, right? US equity futures are going up, which tells me the market is, you know, factoring in a softer tone, potentially sooner interest rate cuts. And Jerome Powell did mention that they are definitely not raising rates, right? So that is in itself just a statement that we're on the same track. So what we've got at the moment is a bit of a tricky one, right? Because we've got, just coming back to the charts, we have got a situation where the yen is so convoluted, it's messing up the price action on a lot of instruments. To me, with the Fed, the way the Fed have come out, I think it's almost potential, or it's going to depend on the economic numbers, that we may have seen a high in the dollar, right? And that's maybe why the BOJ have decided to move. Now, just on that too, they've got bang for their buck here. It's Thursday. It's a 4-day roll. It's the most illiquid time of the week, right? Thursday at the roll in New York. That's why it went from 157.60 down to 153.20, right? A 440-point move. And that's why it's going to ricochet. I wouldn't be surprised to see it back up here at 157 by the close of trade today. So you've just got to factor this in, right? I don't think the bankers are trading this stuff. It's moving a lot because there's no liquidity in the market. Now, let's just have a look at where the actual activity will be today. If I just come across, get you up the calendar. Now, you can expect things to be a little bit sort of loose, but the trend is your friend, right? Euro, sterling, Aussie, Kiwi going up at the moment. We do have to watch dollar yen. If dollar yen corrects, well, then euro, sterling, Aussie, Kiwi going to come off. But today, right, keep an eye on the Swissy. It's a real good chance here to see what the Swiss is doing. Inflation and obviously also retail sales. Bank of Canada Governor Macklem speaking. That could be, you know, neither here nor there. What will be interesting as we come into the North American session, let's just check out the weekly jobless numbers, see if they do have an impact whilst the BOJ are messing around with the instruments. There's a few bits and pieces, the manufacturing data out of Europe. Yeah, sure. To me, it's more a case of sort of tracking what is going on in the markets and keeping track of the sort of risk profiles that are in the market at the moment. Following the Fed, it would be easier if the BOJ should have got their nose out of it. But you know what? It's a long time overdue. The Bank of Japan had to do something. It's just the usual mess. Right? This is not organized. It's just a bloodbath mentality, and it usually ends in tears for the Bank of Japan. Dollar yen will go down when it's ready to go down, and that's on the basis of a weak dollar, not them pushing it, right? So anyway, we'll see how that plays out. But keep track of what's going on. The safe havens, well, you know what? They're the yen and the Swiss have been sort of like going up, but you know what? We'll see how things play out there. At the moment, with the reset of the clocks, it's not clear yet for the currencies what is doing what. It's a little bit messy. If anything, I have noticed the US equities going up more consistently now. I'm a bit more confident with that. Is it creating a risk-off environment? Well, it's yet to be seen, but I would expect the risk-on Euro, Sterling, Aussie, Kiwi to go up. Okay, keep track of that data. There's not really that much significant stuff coming out, so it's one of those ones where you just got to, you know, feel it out. The Swiss is probably the key data, and just that weekly jobless numbers, they can come in and impact. You know, especially after the Fed. Really, the non-farm payrolls are the key employment number, but that's probably something to focus on as you go into Europe. And those European manufacturing numbers may give us some sort of idea what's going on in the euro. And this is important because, you know what, we're at a bit of a crossroads, and we are starting to see our good friend. This is almost the other sleeping giant, euro, right? Wants to go up. We've got a short-term trend line here. Really, resistance is up here around 108, the figure. If we see the dollar sort of continue to come off against the yen, then we might see a nice short squeeze higher up towards 108, especially if we get stronger European numbers here, right? The manufacturing numbers and even the Swissy numbers. But we'll have to see how that plays out. All right, guys, have a good one. All the best. Cheerio.